Good evening. Today we will be covering the post-market analysis dated the 29th of June 2022. Nifty ended in the negative zone after 2 days of gains as the late morning rally after a gap down open fizzled out towards the end of the session. At close, Nifty was down 51.1 points at 15,799.1. Volumes on the NSE were the highest since June 17th. Nifty has shown signs of rising from the opening low levels over the past few sessions. However, it is not able to build on the gains in the session. Nifty could remain in the 15,638 to 15,927 band over the next few sessions. The BSE benchmark, the Sensex, ended 150.48 points or 0.28% at 53,026.97. However, the fall in BSE mid-cap index has been steeper. On the stock-specific front, ONGC, NTPC, and Reliance were among the top Nifty gainers. Starting with the reasonings from general to specific, the Indian market saw some recovery in the last few days with oil prices easing off and China lifting COVID-induced restrictions. The market is under pressure from the anticipation of an economic slowdown fostered by the conflict between Russia and Ukraine. The geopolitical crisis fueled a record rise in inflation in most major economies around the world, jacked up crude oil prices to $119 a barrel, put commodities simmering, and paved the way for a global food crisis. Hence, companies are currently benefited by higher spot prices of oil, leading to strong earnings, while refiners are benefited from higher GRMs, gross refineries margins. Aforementioned reasons gave a spike in the share prices for ONGC. Talking about coal development, India's energy imports from Russia have spiked in the recent weeks as traders have offered steep discounts. Business units of Russian coal traders in Dubai have become active hubs for facilitating deals with India in the recent weeks. Coal is required in the working of thermal power plants, hence the input cost for the NTPC declined for producing the units. Finally, we can see Reliance Industries Limited stock was the top gainer on Sensex and Nifty amid a weak market today after billionaire Mukesh Ambani resigned from the board of his $217 billion group's telecom arm, Reliance Jio, and handed over the firm's reins to elder son Akash. The sentiment was positive around the stock as the move shows clarity on the succession plan of Reliance Industries chairman Mukesh Ambani. On the flip side, HDFC Life, Hindustan Unilever, and Apollo Hospital were among the top drags, down up to 4.4%. Among sectors selling was seen in bank, IT and FMCG names, while the mid-cap and small-cap indices also ended in the red. Hence, the stocks like Hindustan Unilever, Britannia, Dabur, and so on, other stocks traded in red. Furthermore, the geopolitical crisis fueled a record rise in inflation in most major economies around the world, impact of which could also be seen in India. Inflation plays a spoilsport and eats into the returns of investors. Higher the inflation, the more damage return would be. Henceforth, cash on hand with the customer is diminishing, which is affecting the amount that individuals generally spend on insurance. Talking about the recent developments in the corporate segment, we have Tata Technologies Limited on Wednesday said it has joined the Foxconn-initiated MIH consortium to promote development of sustainable mobility solutions and encourage collaboration within the industry. The goal of this Open Electric Vehicle Alliance is to bring the strategic partners together to build the next generation of EV, autonomous driving, and mobility service applications, the global engineering and product development digital services firm. It will further facilitate its global clients engineer better products through compelling product engineering and digital solutions across the product development value chain, from concept design to product engineering to digital manufacturing and after-sales service solutions. The collaboration with the MIH consortium will enable Tata Technologies to collaborate with other members on solutions and capabilities that deliver value for its stakeholders and enable it to innovate new solutions. Indian online education provider Byju has offered to buy Byju Incorporated in a cash deal that values the US-listed edtech company at more than $1 billion. Byju made the offer of about $15 a share to Byju US board last week. The offer represents a 61% premium to Byju US closing price of $9.30 on the Nasdaq on Tuesday and gives the Lanham, Maryland-based company an enterprise value of about $2 billion. 2U has a current market value of $717 million and about $1 billion in debt and other liabilities. Byju has secured financing of more than $2.4 billion for whichever deal it finally pursues as it looks to step up its growth and global expansion. While debt financing is more expensive than just 3 months ago, assets are cheaper and deals are still looking attractive. The shareholders and creditors of NMDC have approved the demerger of the company's under-construction Nagarnar Steel Plant, NSP. The demerger of NSP from NMDC is progressing. The Steel Ministry had convened 2 separate meetings of shareholders and creditors of NMDC to expedite the process of demerging the company's Nagarnar Steel Plant. NMDC, the country's largest iron ore mining company, is setting up a 3 million ton per annum steel plant in Chhattisgarh. The unit is being constructed over 1,980 acres at an estimated cost of 23,140 rupees crore. The Maharashtra government's energy department signed a memorandum of understanding with Adani Green Energy Group Limited, AGEL, to generate 11,000 megawatt green power in the next 5 years. It would entail an investment of 60,000 rupees crore and provide employment to 30,000 persons. According to the agreement, AGEL will set up pumped storage projects, PSP, in the next 4 to 5 years, through which about 11,000 megawatts power will be generated. The state will reap many benefits from PSPs, which will generate or store electricity with the help of non-conventional energy sources, adding that they will be especially useful for immediate power generation in case of shortage. You can contact us from the details mentioned on the screen via missed call, WhatsApp, or email. Thank you for being patient and listening the video to the end. Please do like, share, and subscribe the channel for the latest updates in the market. That's all for today. See you tomorrow.